Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You are watching Business Today Television. This is Market Today. I am Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty began the second week of January on a weak note with benchmarks, the Nifty Bank, broader markets all facing selling pressure at higher levels. Now, will the markets bounce back today given the positive global cues? We will tell you all of it. But first up, the top headlines we're tracking for you this hour. Markets are likely to remain in a sideways consolidating pattern on Tuesday as investors await the start of third quarter earnings while traders look at opportunities to go short in overheated sectors. Profit booking is seen across sectors such as banking and FMCG as investors take profits away from the table after a sustained rally. Third quarter updates by leading companies has not enthused markets. Extreme caution is advised on the long side. Stop losses are a must. Very good morning to all our viewers and good morning to you, Shail, as well. Well, just like how I was saying, it was the Nifty that gave up all the gains it had made on Thursday and Friday in yesterday's trading action. In fact, it did slip below the 21,500 mark on an intraday basis as well. The first time that it has done so since December of 27th last year. However, the comforting factor was that the Nifty did defend 21,500 mark at close. Shail, what do you anticipate as far as the Nifty is concerned? Till the time the heavyweights are contributing, it's going to be difficult to sustain at higher levels.
A very good morning to you, Sakshi, and a very warm welcome to thousands of viewers who are now joining us on Market Today for the freshest and the best commentary on intraday markets. Well, Sakshi, do you remember when we were in school, especially in 10th and 12th, before the board exams, there used to be a prelim pre-board?
Yes, I do. Very hard. And it there used to be yes, even more marks so that were cut in that exam.
Okay. So today is the pre-board exam of Nifty. And I'll tell you why. See, the underlying tone is, let's just say, bearish. And you have a gap up, possible gap up because of the way the GIFT Nifty is behaving. So a 70-80 point gap up is likely. Let's see how that pans out. But for the moment, my understanding is that if yesterday's low is breached, which was 21,492, if this is breached, then we will have a sustained bout of selling pressure. And if the high of yesterday, which is 21,763, that is somehow taken out, then we will have a huge round of short covering by bears, and then we'll again head higher towards 21,800, 21,850. But today is a very, very crucial day for the market in terms of sentiment. And if you look at the underlying granularity of how Indian markets closed, and if you keep the Wall Street technical rebound away, then the granularity of the data shows that probably we are headed lower than higher. See, basically what has happened is that yesterday was when the Nifty closed near its day's low, and if you look at how the advanced decline has shaped up within the Nifty, only 11 stocks out of the 50 closed with minor gains, that is it, and about 40 stocks were in the red. If you look at our own index heavyweight setup, out of 12 stocks, 11 ended in losses, including all major banks. So IT is weak, banks are weak, metals are weak because of global views, and only it is the cement space which is ticking away to some extent in the green. Even FMCG also came down yesterday. So banks, including private and public, IT, metals, FMCG are all down. There's a bit of a light shining on pharma and cement, but it's unlikely to hold. So my understanding is that we will have a gap up, and that gap up on the Nifty will be sold into, and then we'll probably have a breakdown of 19,500. Let's see how it goes. But the options chain, Sakshi, if you remember, all through last week I had mentioned that there are chances that 21,500 is opening up on the Nifty, and that's in front of you, 21,513 as far as yesterday's close is concerned. But I don't want to sound a bit more bearish than what I normally should be, but you see 21,100 is opening up for bears as far as the Nifty options chain is concerned, and everything will depend whether yesterday's low, which is 21,492, holds or not. That is the key, and therefore the pre-board exam, Sakshi.
Absolutely. We will continue to watch out for those levels. But as far as the Nifty Bank is also concerned, Shail, it was weaker among the two indices as most heavyweight banks led the losses yesterday.
Yes.
The index also saw its biggest single-day loss since September last year. Not only did the index fail to hold the 48,000 mark,
yes,
but a bigger worrying factor is that it closed below a crucial support level of 47,500. Your sense of how the Nifty Bank is going to pan out today?
Yes. And Sakshi, when you mention this crucial level, it also is the 20-day exponential moving average, which is the most critical moving average when you look at the medium-term sentiment. So last week, the Nifty Bank gave up the 5 and the 9-day exponential moving average. So the daily sentiment turned weak, selling persisted, and yesterday the index has closed below the 20 EMA, which basically means the medium term trend has also moved away from the bulls, and that's mainly because apart from IndusInd Bank and to some extent ICICI Bank, everything is under selling pressure. The biggest index heavyweight, which is HDFC Bank, is also around 20-day exponential moving average, and therefore Bank Nifty is more bearish than what the Nifty is. And since Bank Nifty is about 33-35% of Nifty, it basically means that the one is trying to pull down the other, Sakshi. My understanding is, let us leave Nifty and Bank Nifty to their gyrations and let us focus on individual stocks. There is a lot of market action happening on that side.
Right. In the F&O space, Shail, any particular stocks you're keeping an eye out on today?
Sakshi, two. One of them is Bajaj Auto, and we will discuss it in great detail. But the fact is that one of the most promising buybacks on the Lal Street will now be in action on Bajaj Auto. The counter has closed at about 6,983, and the buyback has been announced for a whopping 4,000 crore rupees. And hold your breath, the price is 10,000 rupees per share. So that's a sign from the management with the kind of bullishness that they have as far as Bajaj Auto's business is concerned in the coming days. And it is also a sign for shareholders that if you persist with the company, then the 5-digit mark on Bajaj Auto is in shouting distance. I mean, it's there on the horizon, if not on shouting distance. Now, the interesting part is that what would be the percentage of buyback? We'll have somebody joining us who will give that information. But apart from Bajaj Auto, there are two listed holding companies of the Bajaj Auto group which have a huge stake in Bajaj Auto. They will be in focus. One is Bajaj Holdings, an investment at about 8,045, and one is Maharashtra Scooters. So these are the two stocks apart from the Bajaj Auto group, which will be in limelight. Maharashtra Scooters at 7,430, owns roughly 3% of Bajaj Auto, and Bajaj Holdings at about 8,050 owns roughly 30%, if not more, in Bajaj Auto. Sakshi, one is this: Tata Motors has come up with a fantastic third quarter performance update, and these are the two stocks that I am watching on the long side in the auto space in F&O. Sakshi.
Okay, so the auto player is going to be in focus, both two and four wheelers right there. Let's look at how the global markets have shaped up the cues for us this morning. Overnight indices on Wall Street reversed most of the losses that they had seen previously, with S&P 500 gaining 1.4%, Dow Jones up by 0.6% despite a sharp drop in the shares of Boeing. The Nasdaq gained the most in last 2 months as well, with Nvidia shares surging to all-time high levels after announcing the new artificial intelligence products for personal computers. So that was a key trigger, and therefore you saw a very, very sharp uptick, 2.2% higher for Nasdaq, 1.5% uptick for S&P 500, a very strong cue coming in as far as the Wall Street is concerned. The Asian equities, of course, rebounding after Monday's sell-off, after this strong handover of the Wall Street as well. We've actually seen all the indices. So Nikkei is up by 1.3%, Hang Seng up by over 1%, Shanghai Kospi, all of them up in trade. In fact, the trends in the GIFT Nifty also indicate a positive start for the Indian markets. They were earlier showing 125 points of a surge, for the markets in today's trading action. Now, when we talk about the flows, foreign institutional investors bought shares just about 16 odd crore rupees, while the domestic institutional investors also purchased about 155 odd crore rupees worth of stock. So even though the markets were in a downtick yesterday, it was weak, the markets or the investors could take heart from the fact that both the institutional investors were in the buying spree as well. Let's now look at all the stocks that we need to keep an eye out on. Bajaj Auto, as already mentioned by Shail, the board has approved a share buyback worth 4,000 odd crore rupees at a price of 10,000 rupees per share, which is a premium of 43% to yesterday's closing action. And this will be carried out via the tender offer route as well. So the stock will clearly be in focus today. Tata Motors JLR wholesales in December quarter at 1 lakh units is up by 27% year-on-year, 4% sequentially, and the wholesales exclude China JV as well. Retail sales at 1.09 lakh units also have seen a growth of 29%. Royal Enfield is going to be in focus. The company has signed a non-binding MOU with Tamil Nadu government to invest 3,000 odd crore rupees over the next 8 years. Metropolis Healthcare, that's going to be in focus. The core business over here has seen a revenue growth of 12% year-on-year in the December quarter. Revenue growth is largely driven by the volume growth of 9%. From the pharma pack, I'm keeping an eye out on Oro Pharma. Here, the Telangana unit of the company has got an EIR report from the US FDA, so the stock could be reacting positively. BEML is going to be in focus. Remember, yesterday we were discussing the stock. The stock is now, company has now won orders worth 329.8 crores from the Ministry of Defence for supply of mechanical minefield marking equipment. That's Mark II. Hotel space has been in action, and now Lemon Tree is going to be in focus today because the company has signed a new hotel in Meerut. The hotel will open in FY25 and will be franchised by the company. The hotel will have 75 rooms over there. So these are some of the stocks that I am keeping an eye out on. Shail, what else are you looking at? Of course, there's also another factor as a trigger for the markets today, and that's the oil prices that are now seeing dipping.
Yeah, Sakshi, remember, there are signs that this problem in the Middle East sometimes gets aggravated, sometimes dies down. Now there is news that the rebels have, agreed with global shipping lanes not to hurt key movement of crude oil, and therefore crude oil prices are down. Frankly, I only worry about crude oil prices once they go above $85 a barrel. Below that, it's good for me. My understanding is that yesterday's rally on all the three major indices, which is the Dow Jones, S&P 500, and in particular Nasdaq, was a technical snapback. It was a technical rebound because the first week of 2024 for Wall Street was bad. All 5 days there were losses, and therefore there was this nice pickup in trade yesterday. Nasdaq enthuses me because that will also help local sentiment on the Lal Street. Jan 11th, Thursday, is when TCS and Infosys will declare their third quarter earnings. There isn't much that is expected from that end. So that's the only positive that I see. Sakshi, my understanding is that we've done a lot of groundwork in November and December on specifically the Nifty and the Bank Nifty. 13% rally on both these indices. I would imagine if we give back some to the market between what is 9th of Jan and 1st of Feb, then sentiment will be a little better ahead of the interim budget. Interim it might be, but the budget is the budget. So let's just sort of tighten our seat belts and look for a nice slow correction. If you see, there is no jhatka in Nifty that it opens 500 points lower or 200 points lower. It's just a nice 80-point down take, and then yesterday's fall was not accompanied by volumes. We had discussed this from say 315 to 330 that there is no selling pressure. So values are getting down on the Nifty, but that's not accompanied by panic. Sakshi.
Absolutely. Let's keep an eye out on some of the fund houses' recommendations as well. So we have a JP Morgan report on Tata Motors. It has a overweight rating on the company with a target price of 925. So the stock is going to be again in focus on the back of the brokerage house report there. On Bajaj Auto, interestingly, UBS has actually given a sell rating on the company with a target price of 5600. So keep an eye out on that too. Of course, Z Entertainment, I'll be watching out for that stock. Remember, yesterday there were some news reports suggesting that perhaps Sony is close to calling off the $10 billion merger deal with Z. And in case this report comes out to be true, then MK says that on Z Entertainment that the breakdown of the deal can be a setback for both Sony and Z, and therefore the shares could be in focus. Remember, this deal was supposed to happen in December 2023, but it did not happen, and Sony had asked for an extension of the timeline, and perhaps as per the news reports, the kind of standoff is happening on one point, that whether Z's CEO Puneet Goenka will be at the helm of affairs of the merged entity and will lead that or not. So perhaps that has been the tipping point, but we will wait for a final communication. There is no official communication from either of the companies on that front as of yet. Apart from this, on the real estate pack, Jefferies has come out with a report on several companies. So on DLF, they have raised the target price to 875 rupees a share. On Godrej Properties, they have raised the target price to 2635. On Macrotech, they've raised the target price to 1290. On Oberoi Realty, again, a target price has been raised to 1375. And on Suntech Realty, they have raised the target price to 555. On REITs also, Mindspace REITs also, they've raised target price, and Embassy also, they've raised the target price. So the entire real estate pack has got an upgrade from Jefferies as well. So the entire space will also be in focus. Apart from this, we've also seen that the AMC stocks are in focus as far as Jefferies is concerned. They maintained a buy on Nippon AMC and on HDFC AMC. For Nippon AMC, they've raised the target price to 540. And for HDFC AMC, they've raised the target price to 3,890 as well. So these are some of the other pockets that are in focus as well. I guess our guest is now with us. Dharmesh Kant, Head of Equity Research at Cholamandalam Securities, is now joining us. Very good morning to you, Dharmesh. Seeing you for the first time in 2024. Happy New Year to you, and hope this year turns out to be a great one for you. Tell us, what is the sense that you have as far as the markets are concerned? We've already seen a week of trade as far as the markets are in 2024, but volatile action so far. What does it give you an indication of?
Yeah, good morning and a very happy new year to you, Sakshi and Sailji, and to all our viewers. I hope this year turns out to be as prosperous as 2023 was. So as far as markets are concerned, I think we are already seeing some kind of consolidation, some profit taking happening with some sector rebalancing with most of the big HNI clients and the portfolio managers, and that should likely be the scenario. We are already, at the top end of the valuation curve. So in the short-term basis, 2 and 3 year, if you plot it, then still there is a lot of juice left there. But having said that, the problem with most of the analysts is that they always pencil in the highest margins and the highest growth for next 2-3 years. So any miss out there would be a disappointment, and they have no choice but to again derate the stocks, which I see is likely to be a scenario when the Q3 earnings roll out, be it automobiles space or the cement space and banking space. You will see some slippages happening. In the banking, what we have learned is some collection related problems are stemming up from the most vulnerable part. I mean, most of the fintechs company and the NBFCs which are catering to the lower segment of the society may come in for some trouble this time around. So our tentative scenario is there. I mean, profit taking can be the flavor for the next 1 month or so. But that would be a buying opportunity from a long-term perspective. So that is how we are focusing the sectors to look forward to in this leg of the correction. One would be the IT space. We have to hear the committee of the management first. But if any stemming of degrowth, even if it is there, that would be a great opportunity to buy. Metals is another space because internationally the metal prices have done nothing last year. In fact, they were negative year till date. Even this year started with a correction. So that would be another space to watch out for. And the proxy play to the real estate is housing finance companies. So that space tends to gain most with this real estate boom which we are witnessing. So real estate, I mean, companies' prices have moved up, catering to the real estate segment. But housing finance companies, most of the housing finance companies like Calvin Homes and all have not done much. So I think with
Right,
interest
sir.
rate getting top out, that's a good opportunity to gain.
Okay. Very good morning to you, Dharmesh. And let's focus on the elephant in the room, which is this enormously profitable buyback that Bajaj Auto has announced for its shareholders. 4,000 crores worth of buyback. Remember, the last time was 2,500 crores. And at a hopping price of somewhere like 10,000 rupees per share. Your first comments, let's just drill this a little bit more.
See, buybacks, to my mind, is always a negative gesture by a company because they are not finding good opportunity for deployment of money. For promoters' point of view, it does augurs well from them because if they are not participating in the buyback, then their shareholding goes up. But my own sense is that one should not take it in a very positive manner because the size is huge and this kind of a buyback definitely means next growth opportunities. I mean, the management is not seeing it clearly. What they are trying to do is consolidate on what they are sitting on right now. So for let's see how the better contours of this buyback is, how much participation from the promoters is there or not. If they are not promoting, then good for shareholders. But if they are also participating, then definitely it's a negative point.
Okay. Dharmesh, Bajaj Auto has been one of the shining stars of 2023's performance, 96% uptick we've seen in the stock price. What, according to you, would have prompted the promoters to give a 43% premium on this buyback price?
Difficult to say as far as companies' stock price performance is there. That has been phenomenal, and so has been the case with other two-wheeler companies as well. Be it Eicher Motors or Hero Motocop, TVS, they all have done phenomenally well last year. Here, the advantage with Bajaj Auto is 45% of the sales are export driven, and export market is showing some sign of a revival. So, if that is the scenario, even if Indian market does not do well, this company stands a better chance. Valuation wise, it's just a tad higher than mean multiples, 10-year mean multiples. So that advantage is there. And to boost up the sale price, I mean, this kind of offer is maybe there, but it was very difficult to digress into the mind of promoters why such announcement has come through. The only point which comes to my mind is giving a stability to the share price which has moved up so high.
Okay.
Okay. And there are two promoter listed entities, Bajaj Holding and Maharashtra Scooters, which collectively own somewhere like 33% stake in Bajaj Auto. Do you think, a play on that side for the retail investor or an institutional investor would make more sense? Because in this buyback, the promoters will also participate.
Yeah, I mean, if you are thinking of trending your shares into this buyback and getting a better allotment and that trade, if you want to play off, however, 2% kind of gains you can make in a short span of time. If you are looking for that, then it doesn't make a sense going through indirect route as well. But that is the end of it. It's just a trade which is there on the cards to be played out.
Dharmesh, since it is through the tender route, what are you advising investors at this point in time looking to participate in this buyback? Should they buy afresh into Bajaj Auto?
Yeah, definitely. I mean, some money would be left on the table. I have not done the exact calculation how much will come to the retail shareholders if they participate. I mean, promoters also participating. So the rough calculation would be around 2.5% kind of a yield, which will be left on the table if they participated current stock price. But definitely, this is a trade which is always played by most of the HNI clients, so that can be done.
Okay, what we'll do is we'll quickly take a break right here. When we come back, we will go ahead with the pre-opening trades and we will continue to discuss more stocks with Dharmesh. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
All right, welcome back. You are watching Market Today on Business Today television. Let's get looking at how the markets are hitting pre-open. 158 points higher in the pre-open. 0.7% of an uptick coming in at 21,671 currently on the Nifty as well. So it is following what the GIFT Nifty trades were indicating. Definitely looks like a positive start. Let's look at a few Nifty Bank, what that is doing in the pre-opening trade as well. And let's see if there is an uptick in the banking majors, because yesterday that was the weaker index. But you're quickly seeing all that sell-off happening on the Nifty too. We're now absolutely flat on the Nifty. It's very, very volatile at this point in time. 21,572 currently on the SPI. So that's the counter that's coming up. It's about 1% higher in trade. Let's look at the Nifty Bank as well. And then let's look at all the stocks. So HDFC Bank lower in trade, 2.8% down at 1616 odd levels coming in on HDFC Bank currently. Let's also look at some of the other stocks. ICICI Bank is up by about 1.5% in trade. So positive on HDFC Bank, on ICICI Bank, but negative on HDFC Bank right now. The rupee has opened 83.06 at this current levels as well. So that's as far as the rupee opening is concerned. Axis Bank about just 1125.2% higher in trade right now. We're also looking at the Sensex that's up by 382 points, 71,737 currently on this index as well. Let's also look at what Reliance Industries is doing at this point in time in the pre-opening trade as well. So Canara Bank is up by 1%. So some of the PSU banks are showing some upticks. I want to see Reliance Industries and then some of the IT stocks. Reliance Industries about 0.4% higher in trade at 25.97 currently. Let's also look at some of the other stocks that are moving up in trade. So Infosys, that's up by 1%. Remember, that's the one that kickstarts the IT set of earnings starting 11th of January, 1540 coming in on the IT pack. Right now, 100 points higher, 21,600 kind of levels coming in as far as the Nifty is concerned. TCS is also up by 1%. So the IT stocks are pulling up higher in the pre-opening trading session. Let's also look at HCL Tech. That's 1464. That's the level at which it is trading at. So this is as far as some of the movement in the IT pack is concerned. Banking we've already seen, and we've also seen Reliance Industries at this point in time. All right, let's get Dharmesh into the conversation. Dharmesh, how do you see the market opening, and where do you see the next sectoral rotation to take place, especially when it comes to the IT pack? Is that going to be on your top list as well to watch?
Yeah, definitely, Sakshi. IT is there on the top pecking order because that is where I think the maximum traction is likely to come through. Only we need to understand from the management how their commentary is there. So commentary would be more important than numbers. I think there would be again slight slippage in the numbers when they report their earnings this time around. But going forward, the commentary is likely to be more positive than what it was in earlier quarters. So if there is no downward revision of the guidance and the band which they give. So that would be good enough for IT companies to carry on the already there has been some traction into most of the stocks to carry on from there. So IT is one space which we are looking positively forward to. And the next is the housing finance companies. These two sectors are likely to do well. As far as market opening is concerned, it can be muted. We can see some, pullback in the first couple of hours, but sustainability of that pullback towards the end of the day would be more critical.
All right, let's look at Bajaj Auto, how that is looking in the pre-opening trade. That is one clear stock, the top stock that we want to watch out for amid the buyback news as to how that is opening. Reacting 10% higher, 698 rupees higher, 76.82 currently on Bajaj Auto. That's the kind of move that you're seeing amid the buyback news, 4,000 odd crore rupees worth of shares on buyback at 10,000 rupees. So the 43% premium is already getting reduced as far as the pre-opening trade is concerned. Shail, 10% higher for Bajaj Auto on the buyback news. Clearly one stock that is going to be in top focus today.
Absolutely, Sakshi. And let's just say that it's the deserving candidate for a re-rating. While opinion differs on how a buyback has to be treated, but the fact remains for existing shareholders post the buyback, more value is created because idle cash is put to good use, and number of shareholders dividing the same pie becomes less, therefore EPS rises, therefore PE rises, and therefore you have an uptick on stock price. So to my understanding, this is a very good move in the benefit of long-term shareholders of Bajaj Auto. Of course, daily statistics and ups and downs do make a difference, but like I said, in the long term, this is extremely beneficial. And in the long term, Nifty, while it might compound, today the gap up is really good, 141 points higher, 21,653. Let's see how it maintains itself. Also, we'll pay an attention to what other stocks are doing, Sakshi. We have the likes of Bandhan Bank, 3% higher. Remember, yesterday it was the top loser in F&O, so maybe a kind of a uptick that's having a technical rebound. How should I say, high beta is back with a bang. Let's look at the PSU segment and then pay attention to Akshay Bhagwat. Okay, GMDC 3% higher. They've got a approval from the government to expand their mining capacity. GSFC 2.25% higher, 280. They have permission, another unit at GSFC starting, so that will add to the top line. BEML running good, 2% higher. So this is how markets are. Let's look at the most active counters. Z, 8% lower. Sakshi mentioned that the planned merger with Sony seems to be hitting a roadblock, 256.10. And you have, how should I say, more losses coming in on, surprising. Sakshi, out of the 185 stock futures on F&O, only 3 are in the red. So it's a fairly good opening that we have, 140 points higher on the Nifty, 21,650. What are you watching?
Well, Adani Ports is moving higher in trade, about 1% higher. That's the one that I'm watching out for. Bajaj Auto clearly now the top mover, 5% higher as the markets are settling in the pre-open. We are also looking at IT stocks that are moving up in trade ahead of the earnings factor. So Wipro, Infosys, HCL Tech, they're all up in trade. TCS is up in trade. They're all up by 1%. So it's going to be an IT kind of a day. I can see the Nifty IT about 1% higher in the pre-opening space. So that's the one that's moving higher. Of course, autos follow suit with the kind of move that we are looking at on both Bajaj Auto and Tata Motors now, about 1.5% higher in trade. Let's get Akshay Bhagwat with us. He's Senior Vice President, Derivatives Research at JM Financial Services. Akshay, very good morning to you. All right, we will also wait for Devin Chokshi to join us on Bajaj Auto's buyback. But in the meanwhile, Akshay is with us. Akshay, good morning to you. What are you watching out for, and how would you trade Bajaj Auto after this 10% surge already in pre-open?
Firstly, for the Nifty, for day trading, we would be opening at a crucial support. That's valid only for the day trading session. That's 21,500. Considering the fact that a lot of put writing is placed at 21,500, it also coincides to be the recent swing low. So let's see if this support manages to hold on or not for day trading. But the broader view for the Nifty for Jan series is subdued. Probably the supports I talk of is going to break eventually. So this support is valid just for day trading. So there is a slight nervousness in the market. January is expected to remain subdued. Market breadth is likely to be weak. Be stock specific. That is the advice we give to our clients.
Okay, and we have Devin
Right.
Chokshi
Let's
now
see if Devin
joining
Bhai
us.
is on.
Yes, Shail, please continue. He's with us on the phone line.
Yeah, Devan Bhai, a very warm good morning to you. Your first take on Bajaj Auto's buyback. The market is appreciating it. What is your thought process?
Good morning, Shail. Well, I think the total buyback amount is about 2% of the market capitalization of the company. So it's not going to be very exciting thing for many investors per se, because apart from the stock price going up, an investor is not likely to get handsomely rewarded because it's only about, I think, a 2% of the market cap which is going into the buyback kind of an arrangement. So from that perspective, this total equity getting accepted under the buyback, even at a higher price, is not going to be giving him a significant amount of advantage per se on arbitrage front either. That's the first point which I would like to say. Having said that, I think this is a fantastic reward for the investor. Also because of the fact that the company has been distributing the dividend, which is on a higher side always, and I think which is also 2% yield as on the as we can see this from the record. And along with that, I think this buyback is coming. So totally in this year, the company is expected to reward investors handsomely from this buyback as well as from the point of view of dividend, both. As such, I think the cash position in the balance sheet is extremely comfortable. Uh, they have a resolution in place wherein any cash held in the balance sheet above 50,000 crores, 15,000 crores, is 70% of that cash will be distributed to investors. Today, the balance sheet cash is around 23,000 crores plus. So above that, I think 6,500 crores is, I think, is the amount which is available for distribution. And in my viewpoint, I think this is where probably this company is going to be having, I think, a stable price to higher price going forward as well. So yes, it's a good announcement. Market is definitely going to react positively on the, at least on the sentiment point of view. But as far as I think the investors getting shares accepted, I think is going to be relatively less, as I explained earlier.
Okay. Devan Bhai, since Bajaj Auto has indicated 10,000 rupees as the buyback price, what according to you would have gone through the management's thinking process to give a buyback price which is 42-43% higher than yesterday's close? Is this also an indication where Bajaj Auto might be headed in the medium term as far as the current market price is concerned?
See, the first factor which is driving this particular thought process is about the yield. They have always been, I think, distributing the surplus, I think, at 2% yield. And this buyback is also, I think, coming up at a 2% yield. So that is the first factor which comes up. Second most important factor which comes up in the consideration, as I understand, is the yearly cash generation in the balance sheet. 7 to 8,000 crores worth of cash generation is happening on a yearly basis. Even after the capex program is met, I think this is a surplus cash that the company is generating in the books on a year-over-year basis. So that's the second point. The third point, as I explained, balance sheet cash of 23,000 crores. In 2 years' time, I think they have managed to once again bounce back with a cash balance sheet of around more than 20,000 crores. So this is again, I think, a point where probably the company is distributing. And last but not the least important point here, moment you distribute the cash, that is a low yielding cash is being given away from the balance sheet, that means your financial ratios start improving, your capital starts going down, and at the same time, I think your earning per share ratio starts improving, which is giving you a higher amount of valuation in the marketplace. So it's a resultant outcome, of course, through this kind of a financial re-engineering process, I call it as. It's a resultant outcome. But the fact remains that I think in order to show the better performance on the balance sheet ratio front, so distributing the surplus cash to investors is definitely helping the company in getting the better market valuations. Today they are about 2 lakh crore market cap company. I think it is expected that I think with the kind of performance that they are showing in the business, the company would be growing at a steady pace of around 20% kind of a CAGR as far as the market cap growth is concerned.
Sense for retail investors to also look at amid this buyback the two promoter holding companies which are also listed. One is Bajaj Holdings. It has about a 34% kind of a share holding, and Maharashtra Scooters, which has a 3% holding in Bajaj Auto as well.
Yeah, you are right. I think an indirect beneficiaries are Bajaj Holding in Maharashtra Scooters for this particular buyback. And it's quite possible that I think the Maharashtra Scooters in particular might want to basically enjoy this buyback, I think, to the extent possible. So one will have to wait and see. Bajaj Holding, I'm not too sure. In fact, I think in Bajaj Holding, the group has always been acquiring more number of shares from the market, sweeping acquisitions over the last so many years. So to that extent, I believe that I think even if there is a buyback, they may probably want to acquire more shares from the market whenever the opportunity comes to them. But for retail investors, I agree that retail investors are getting benefited out of this kind of move, one on the dividend front and second on the buyback front.
Okay, thank you Devin Bhai for this wonderful in-depth understanding of Bajaj Auto's balance sheet and what should investors be doing. Let's get back to the opening trades on the Nifty. A gap up of 140 points, 21,650 for you. Nifty Bank is 0.5% higher. Nifty IT index is 1.5% higher. So it's the Nasdaq kick in that's impacting domestic IT. Let's look at Bajaj Auto. 5% higher now, 73.19. It's the top gainer on the Nifty as well as on the FNO. Let's look at how the markets have opened. Sakshi, all 12 index heavyweights are in the green. Let's see how this continues, and the Nifty is now gathering momentum, perhaps putting bears on the back foot who will now engage in short covering. TCS 1% higher, 37.18. Infosys 1.7% higher, 15.48. What is Reliance doing? 0.6% higher, 26.03. HDFC Bank flat at 16.64. Corporate banks, ICICI 0.7% higher, 9.89. And Axis Bank 11.28, 0.5% higher. Nifty is opening fairly strongly. Let's look at the advanced decline ratio on the Nifty itself. All 50 shares in Nifty are in the green, Sakshi. This is a big plus. Selling pressure coming on Bajaj Auto from the top line. Now 3.5% higher, 72.35. Let's look at the FNO space minus the index heavyweights, and in terms of gainers, it's Coforge 3% higher, 62.40. It's Wipro, Emphasis, it's IT that's taking it away, and of course you have erstwhile favorites NMDC 2% higher, 219.80. National Aluminium 1.8% higher, 126.85. Let's look at the most active counters on NSE 500 and then reach out to our technical panel. Z, top traded counter 7.5% lower, 256.35. This is a 2-month low on the counter. 423 shares, 423 crore worth of transactions happening. Bajaj Auto, Trident Sakshi, chota packet, bada dhamaka, up 7.5% again, 52 238 crores. This is what I am watching. It's a sea of green across the markets. What are you looking at?
Stocks along with the auto stocks are buzzing in trade. Shell, Apollo Tyres, Balkrishna Industries both up in trade and among the top gainers as far as the F&O space is concerned. Apart from it, of course, it's the mid-cap IT names that you are talking about and the large caps as well, which are forming as part of the top movers. Persistent Systems, Coforge, they're up in trade. Wipro is up in trade. L&T Technologies is up in trade as well. So it's going to be an IT kind of a day. We're also looking at Birla Soft now coming up about 2% higher in trade as well. Of course, some of the gains are also coming in as far as the OMC stocks are concerned. Remember, the oil prices are coming down and they would further help HPCL and BPCL kind of stocks up into the green. HPCL is among the top movers as far as the F&O action is also concerned. The other stock from the banking space that's catching my attention in the F&O action is Bandhan Bank. That's about 2% higher in trade as well. So that's again a top mover over there. Apart from this, from the Nifty 500 basket, it's again some of the stocks which are moving up. So easy trip planners, let's look at that one. After a move that was seen about 6% higher in trade yesterday, it's again 3% up in trade today as well amid the Maldives controversy. This is one stock that's definitely reacting on the positive side. This is despite the cancellations that they've done in the Maldives bookings as well. But it's constantly focusing on Lakshadweep and the other tropical islands at the same time as well. So we'll keep an eye out on easy trip planners as well. Akshay, to you, how would you look at the market opening and any particular stocks that you're keeping an eye out on now?
Well, the opening certainly is encouraging. The supports of 21,500 have been respected. And the IT pack is supporting the Nifty, as I understand, ahead of the result season. So IT is where I would be looking forward to from the buy perspective. A lot of stocks are technically very strongly positioned. HCL Tech, Mphasis, Infosys, Wipro, all these four names have very strong technical setup from a trading perspective. So ahead of the results, consider buying the IT pack. Easily from a trading perspective, they can give you 2 to 3% upside from the current level ahead of the results.
Okay. Right.
Sakshi, let's
yes,
look at
yes,
the broader markets. As Akshay stated, it's a fairly decent opening. All 19 indices are in the green. I'm a little more concerned with the NSE 500. So 19,557 up 0.7%. It's a 10:1 advanced decline ratio on this one. 450 stocks in the green, 50 in the red. We only hope to see that for the first half an hour, these gains are sort of maintained, and only then will you sort of feel a little bit more confident for the rest of the day. As I had mentioned, the advanced decline ratio on the Nifty is 50:0, now improving a bit for the bears. Two stocks are in the red, but it's immaterial. Let's see what happens in the first half hour of trade as far as Nifty is concerned. In terms of top gainers, Sakshi, GMDC is at a fresh record high. This one needs to be paid attention to, and that's because they've won a permission from the government to expand their mining capacity. GSFC 5% higher to 88. No let up in BAML at 1.8% higher, 32.28. And I believe metals are back in action. Over to you.
Absolutely. So the metals are sharply higher in trade today, about 1% odd or so. And I'm looking at some of the stocks from the metals basket like JSPL, that's up by 2.5%. Hindustan Copper, 2.3% higher in trade. NMDC, Steel Authority, Nalco, all of them up in trade. Dharmesh, to you, how would you look at the metal pack right now and any particular stocks that you're keeping an eye out on from the medium to long-term perspective?
From medium to long-term perspective, I think it's a buy on corrections. Don't buy on the rise. The metals will give you an opportunity for dips to be bought into. And I mean, from a year's perspective, they are very strictly poised. Because last year, the entire international market metals were down. And this year, again, it started with a downtake. But going forward with activities picking up in most of the markets in interest rate topping out, I think construction activity will pick up globally, and that's good for the metal sectors. Top pick being JSW Steel and Hindalco. So these are the two stocks which are the top pick from the metal basket.
Okay. Akshay, to you, how would you look at some of these IT names that are moving away and flying away in the markets, especially stocks like Coforge, Birlasoft, L&T Technology Services? They're all up in the F&O action. And which is the strongest counter as per you in the mid-cap IT?
In the mid-cap IT space, firstly, Coforge has a very strong technical setup. If you look at the charts, 6,000 is a demand area. Time and again, you're having strong buying activity at the levels of 6,000. At the level of 6 to 6,7, where it trades currently, there is a good chance that it should be breaking and getting past its recent swing high above 6,500. So yes, a strong technical setup with 6,000 as the base. You can buy Coforge for targets of 6,600 plus. And Birlasoft is the second trade here, which you can consider from the IT mid-cap names. Again, a very strong technical structure. 690 is where time and again it has a tendency to recover. It should be going for 750 plus in short term. So yes, it's a trading bet. Maybe it consolidates a bit for 2-3 days, but overall the chart structure is positive. So if you are holding for the entire Jan series, then you can consider buying it for targets of 775 with a stop loss below 690.
Okay. Dharmesh, to you on real estate space, you know, this index has been on a fire. Last 2023, we saw the index fly about 80-85%. In the first week of January, again a 7-8% kind of a surge is what we've seen, and it's constantly moving in the second week again. What do you think is behind this stellar move in the real estate space, and are you keeping an eye out on some top 2 or 3 stocks which can still be in the buying list as far as retail investors are concerned?
Yeah, definitely, Sakshi. I mean, why these stocks are flying is because of the sales which are happening, and it's been very robust and very strong for the entire year. This year has also started with the bang, as was evident from the DLF sales which have just happened. And you know, the best part of this entire real estate space is the prices have not moved up of the houses which they are selling. So 5 to 7% kind of an uptick is there in the unit prices which are being sold, and they have all focused as a entire basket. I mean, all the companies have focused on the volume growth rather than the price growth. And that is what the common, consensus is among them. They want that more and more units should be sold. It should be affordable to the respective classes, be it luxury, mid, or affordable segment. I think they are still not done. I mean, 40 to 50% of the move is still pending as far as sales volume growth is concerned. And the top pick out of the basket would be two Mumbai real estate based player. One is Macrotech Developers and the other is Opera Realty. Along with that, you can add DLF and Phoenix Mill. So these are the four companies we are focusing on from the target play. And I still think 30 to 40% kind of an upside, just based on the kind of inventory which are likely to come up in this year, and the land bank they are sitting on should be there on the cards for all these companies.
Okay, fair enough. All right, I was mentioning, the tire stocks as well. I believe, Akshay, you've also mentioned Apollo Tyres as one of the top picks from your previous interaction. I remember it's now moving up 3.5% higher as a top mover in the F&O space. What's the next call you would have on Apollo Tyres now?
Yes, Apollo Tyres has a strong technical structure. If you look at the charts right now, it is heading for a breakout of a possible resistance of around 470, 475 area. And the chances are most likely that this breakout should happen soon. The technical chart structure is very positive. 495, 500 is where they should be heading for. So 440 is a support base. You can consider buying it for targets of 495. If you're holding it, the same target applies. Stop loss on all your buy trades should be placed below 430.
Okay, fair enough. Let's look at some of the other moving counters. A lot of buzzing spaces in trade today. Let's look at the Nifty first. The Nifty is at 21,668 currently. Apart from the IT pack and the auto pack that we've already mentioned, there are some stocks like ITC that's again in flavor today. 469 odd levels coming in on this one. Grasim is up by 1%. You have Titan that's moving up 0.8% higher. You have the banking counters, the heavyweights like ICICI Bank coming up in trade. Kotak Mahindra Bank also up in trade today. Axis Bank is also participating. Reliance Industries is at 2603 in trade today. Then you have the healthcare majors like Divi's and Dr. Reddy's Laboratories also participating, Sun Pharma participating. It's a green screen today. I mean, like all the stocks from the Nifty basket are up into the green, barring just slight losses coming in on Britannia. Sectorally, of course, all the sectors are positive in the screen. Nifty 500, let's look at some counters then. Alok Industries tops the charts, 38.05 again in trade today, 7% higher. Let me take Akshay your view, and then Dharmesh, in case you track Alok Industries. Of course, it was a small ticket stock, but the kind of move that we've seen, about a 60% or some move in the last 5-6 trading sessions, is what we've already witnessed after Reliance Industries bought a fresh via preferential shares. How would you look at the technical charts of Alok Industries right now? Is this also a buying point for investors? Akshay, first to you.
Yes, Alok Industries, a small ticket name, and if you look at the theme of the market in the last couple of months, a lot of small ticket names have been chased into by most of the retail investors. That is the flavor of the market. Now, Alok Industries has seen a strong breakout above the 32 level, and it has been accompanied with strong buying volume. So that's a positive sentiment buy trade which builds up into Alok Industries. Yes, it's more of chasing the momentum and just getting lucky, you may say, because if the stock just gets in its shell, then it takes ages to again move up. So momentum is there. It can touch 45 and chase the momentum.
Okay. Oh, all right. I think there is some glitch that Yes, Akshay.
Yeah.
Okay,
Yes.
now we could hear you. There was an audio glitch in between. So you're positive on the stock, and currently also you're
Yes.
giving a buy. What is the target you're saying over here?
Looking at a target of 45 with a stop loss of around 29.
All right. Dharmesh, do you track this stock at all?
No, Sakshi, apologies for that. We don't track Alok's Industries.
All right. Okay. So the technical parameters strong currently, of course, after the 5-6 trading sessions kind of a move. Akshay believes that 45 kind of targets can be kept with a stop loss of 29 on the stock as well. So the risk reward is also in favor of investors at this point in time as well. The other space that's again buzzing is the PSU banking space that has been clearly one of our favorite spaces to discuss over the last 1 year or so. Now, let's talk about the kind of move that we are seeing here. So Punjab National Bank topping the charts, 1.5% higher. Central Bank of India, Canara Bank, BOB, Bank of Maharashtra, State Bank, all of them are buzzing in trade as well. Dharmesh, to you, is it too late to take an entry into the PSU banking story?
I think so, because if you look at the update of the credit growth of, say, Bank of Baroda, it was not very good enough. At the same time, deposit growth was lagging behind the credit growth. Secondly, what we are getting a feel from the base level is that there is some collection problem coming through. So there would be some NPA slippages coming around this time, and they are already heated up. They all have moved up quite significantly. I think if you want to play the financial space, which you should be investing into, private sector banks and housing finance companies stands a better chance. So maybe an ICICI Bank or Kotak Bank and HDFC Bank is better placed than SBI, Bank of Baroda or PNB. As a momentum trade, you can still get, but I don't think this year, in the calendar year 2024, they would be an outperformer.
Okay, fair enough. Let's look at some of the other buzzing areas in trade today. Let's now look at the mid and the small cap space. Anything that attracts you, Akshay, from the mid and the small cap stocks? Anything that you can talk about today? One or two stocks that you would like to highlight?
Well, from the mid-cap space, well, from the banking, you can keep an eye on Punjab National Bank. See, Punjab National Bank has a very strong chart structure, and from the PSU banking space, somewhere or the other, time and again, you are seeing good buying action at every dip in this banking stock. So, yes, it's on my buy radar. I think 110 should be on very soon. Technically, a very strong buying activity, which I note. 90 is a support base, so your stops should be below the support and you target 110. So PNB is one of the stocks which will be on my buy list. And from the mid cap space, there's one more stock which is this new age company, Zomato Limited. This has a very strong chart structure. It's unstoppable. Last 8 months have been absolutely fabulous. And I believe this has still momentum to go to its all-time high level, still 160. So consider Zomato as a buy trade. Your stop loss is below 130 and your target area can be till around 145 to 150.
Okay, since you're talking about the new age stocks, then Dharmesh, I wanted to ask you on Nykaa. Is there any promising factor that you're looking at? The stock is again up third day in a row today, and after the declaration of some of the business updates, the stock is up today. But is there any promise that you see on this stock, or is this still a no-go area?
Still a no-go area. I mean, the valuations are very discomforting. The trades are happening, no doubt about that. So one can play the momentum and technicals. But for me, it's absolutely an over area.
Okay, fair enough. Let's look at some of the other stocks that are buzzing in trade. So I can, in the Nifty 500 basket, I can look at IRB Infrastructure, that's up by 8 odd percent at 45 odd levels. Gujarat State Fertilizers, that's a stock that has been clearly buzzing in the fertilizer pack. That's up by 5.5%. Then you have Endurance Tech, 5.5% higher. Brigade Enterprises up by 5.5% as well. Infibeam Avenue is about 4% up in trade. ABB Limited is up in trade about 3 odd percent. GSPL is up in trade. Gujarat State Petronet, that's up by 3 odd percent. Century Textiles, after yesterday's stunning move, again it's up in trade. So these are some of the buzzing areas that are coming up in the Nifty 500 basket. Akshay, anything that interests you from the Nifty 500, the stocks that I mentioned?
Well, from the fertilizer space, you can consider Chambal Fertilizers here. This stock has seen a double bottom breakout, which is a bullish pattern on the chart structure from a medium-term perspective. So 356, 360 is the zone from where this breakout has been seen. So that's a positive development. Right now, it's been kind of consolidating slightly in the last couple of days trading session, but I believe the momentum will regain soon. 400 plus should be your target. So Chambal Fertilizers is one name which I would be interested in on the buy side in from the Nifty 500 stocks.
Okay, the other space that is now showing some kind of an uptick is the consumer durable space as well. And I can see stocks like Amber Enterprises, Havells, Whirlpool, Titan, all up in trade. You also have Kajaria Ceramics, Crompton Greaves, Voltas that is buzzing in trade as well. Dharmesh, anything from the consumer durables that interests you at this point?
I think Titan stands a good chance along with Voltas. So Voltas has been beaten down very significantly last year. The numbers were also not there, but I think going forward this year with most of the input prices issue getting resolved and again consumption picking up on the durable side, also the cycle is in favor. So Voltas stands out along with Titan. Titan has been doing phenomenally well. I mean, no questions asked as far as the performance is concerned. Only the valuation is always a concern with Titan. That's likely to be there. So these are the two stocks which still are buy at current levels if you are having at least 6 months to 9 year perspective.
Okay, fair enough. Well, on that note, thanks a lot, Dharmesh, and thanks a lot, Akshay, for being with us on this special edition and sharing with us all the stock ideas. It's been a buzzing market so far in the first 45 minutes of trade that we have already seen. 21,643 currently on the Nifty, 129 points higher. And we're also looking at all the sectors of the Nifty up into the green. It's the IT pack that's shining the brightest. It's got that leg up from the overseas cues from NASDAQ especially. That was up by 2.2 odd percent. So the tech stocks are going to be in flavor all through today. Bajaj Auto clearly 2.5% higher, although much lower than what it was indicating in the pre-opening action. But amid the buyback news, it's hovering around 7,145 kind of rupees currently in trade. It's a Z Entertainment that is seeing some pain built up after the rumors and of course some of the news reports that indicate that perhaps the Sony Z merger may not take off, and that has caused a sharp downtick on Z shares today, 9% down at 253 currently. Of course, we are looking at the FNO space where L&T Technologies, Apollo Tyres, ABB, Gujarat Narmada Valley Fertilizers, Siemens, these are the stocks that are buzzing in trade. On the Nifty 500 pack, you again have IRB Infra, Alok Industries, Brigade Enterprises, FSN E-Commerce, that's now 4.5% higher in trade. Infibeam Avenues, these are the stocks that are buzzing in trade as well. What we'll do is we will wind down this edition, but do stay tuned onto Business Today Television as we will continue to give you all those videos about all the stocks that you really need to read up about and want to watch about as to what should your strategy be. So stay tuned with us on Business Today Television.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, Managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Kapil, of course, Prime Minister Narendra Modi recently visited the Lakshadweep island.